Most people think they understand Bitcoin. They think it's just another risky crypto asset, a speculative trade, something young investors gamble on. But here's the truth most people are missing. Bitcoin in America is no longer playing the same game. Since the approval of Bitcoin ETFs, the way the United States looks at Bitcoin has quietly changed. And most retail investors didn't even notice it happening. This is not a price prediction video. This is not hype. This is about how Bitcoin is being reclassified inside the American financial system. And once you understand that shift, you will never look at Bitcoin the same way again. For years, Bitcoin lived outside the system. Wall Street talked about it. Media argued about it. Regulators questioned it. But institutions stayed away. Not because they didn't want Bitcoin, but because they couldn't legally touch it. ETFs changed that. The moment Bitcoin ETFs were approved, Bitcoin stopped being just a crypto asset and started becoming a financial product. America could absorb. Think about what that really means. Pension funds, insurance companies, registered investment advisors, 401k portfolios. All of these exist inside strict regulatory frameworks. Before ETFs, Bitcoin couldn't enter those systems. After ETFs, the doors opened. And when America opens financial doors, money doesn't rush in emotionally. It flows in strategically. This part is critical to understand. Americans don't hate risk, but they hate uncertainty and lack of structure. Crypto exchanges, offshore, lightly regulated, confusing custody, headline risk, ETFs, SEC regulated, transparent, insured structures, familiar reporting. To an American investor, Bitcoin ETFs don't feel like crypto. They feel like gold ETFs, commodity ETFs, index funds, same language. Same paperwork, same compliance. That psychological shift alone changes demand. Bitcoin didn't become safer. Bitcoin became easier to trust. Here's something fascinating. Notice how Bitcoin is now discussed in American media. Not as the future of money, currency replacement, anti-system rebellion, but as digital gold, store of value, hedge against monetary risk. That's not accidental. America already understands gold. It understands scarcity. It understands hedges. Bitcoin is being framed not as a revolution, but as an upgrade to an existing concept. And that framing matters, because revolutions scare institutions. Upgrades don't. Retail investors often ask, why didn't institutions buy earlier? Wrong question. Institutions don't chase upside the way individuals do. They manage exposure. To them, Bitcoin isn't about getting rich. It's about not being underexposed. In a world where governments print aggressively, debt keeps growing, trust in fiat slowly erodes, not owning Bitcoin becomes a risk. ETFs allow institutions to say, we have exposure. We are covered. That's a massive psychological difference. For years, people compared Bitcoin to gold. Most Americans didn't buy it. Now, after ETFs, the comparison finally works. Why? Gold. Scarce, no yield. Hedge asset, held through ETFs. Bitcoin. Digitally scarce, no yield. Hedge asset, now held through ETFs. Same wrapper, same logic, different technology. To American portfolios, Bitcoin now competes with gold, not with tech stocks. That's a huge repositioning. This is where many viewers misunderstand. ETF approval was not about a price pump. It was about legitimacy. Legitimacy works slowly, quietly, but powerfully. Institutional money enters gradually, allocates conservatively, thinks in years, not weeks. That's why Bitcoin didn't instantly replace gold. And it won't, but it doesn't need to. Even a small reallocation from traditional hedge assets creates massive long-term demand. Let's be honest, Bitcoin is not universally accepted in the US, and that's important for credibility. Concerns remain volatility, regulatory uncertainty, political shifts, technological risk. But here's the difference now. Those risks are debated inside the system, not outside it. Bitcoin is no longer ignored. It's analyzed. And in American finance, being analyzed is the first step toward adoption. This is the part most people miss. ETFs don't just bring money. They bring research, coverage, institutional memory, long-term narratives. Bitcoin now has a seat at the table. That doesn't mean it will always win, but it means it will always be considered. And in the US financial system, consideration is everything. Bitcoin didn't become mainstream because people suddenly loved it. Bitcoin became mainstream because It fit into existing financial structures. It was repackaged in a familiar form, and it solved a modern risk problem. America didn't adopt Bitcoin emotionally. It adopted it professionally, and that's far more powerful because trends fade, but financial infrastructure lasts. So the real question isn't, will Bitcoin go up this year? The real question is, what happens when an entire financial system quietly decides Bitcoin belongs? That answer won't come in headlines. It will show up slowly in allocations, in portfolios, and in silence. And by the time it's obvious, it will already be too late to ignore.